Hello and welcome to Follow the Money. I'm Raine Musñgi. Join us as we explore the tools and insights you need to jumpstart your financial journey. Global food prices hit an 18-month high in October. According to the UN's Food and Agricultural Organization, the food price index reached 127.4 last month, a 2% increase from September. The figure is 5.5% higher than a year ago, but it's 20.5% lower than the peak reached in March 2022 following Russia's invasion of agricultural powerhouse Ukraine. All major food commodities except meat saw price increases. Vegetable oils experienced the largest rise at 7.3% due to low production. The Bank of Japan remains focused on its 2% inflation target despite rising global challenges, including climate-related risks. BOJ officials said they are closely monitoring how climate change could impact the country's economy with potential disruptions to supply chains and infrastructure. As inflation pressures remain subdued in Japan, the central bank is working to balance its monetary policy with long-term environmental sustainability goals. The BOJ's stance on inflation will be crucial in shaping Japan's economic policy for the year ahead. European Central Bank official Robert Holzmann has suggested that the bank may need to cut interest rates at its December meeting to support a slowing Eurozone economy. Holzmann stated that given the lack of inflationary pressures, a rate cut would help stimulate economic activity. The Eurozone economy has been underperforming, with growth slowing and unemployment rising in several member states. Market analysts are closely watching the ECB's next steps as policymakers navigate a fragile economy. U.S. Federal Reserve official Neil Kashkari has warned that mass deportations of undocumented workers could significantly disrupt the U.S. labor market. Kashkari cautioned that certain industries, such as agriculture and construction, rely heavily on immigrant labor. With unemployment rates at historic lows, he argued that removing large numbers of workers could further strain labor availability and lead to economic inefficiencies. The issue remains point of contention in U.S. policy, with the broader economic consequences still unclear. Australia faces the threat of short-term economic pain in the form of reduced output and further inflation pressures as a result of incoming U.S. President Donald Trump's policy agenda. That's according to Treasurer Jim Chalmers in an interview with Bloomberg. As the U.S. hiked tariffs on Chinese goods, Australia saw its exports to China dwindle, affecting key industries such as agriculture and mining. Economists are warning that the economic strain could continue for years, with Australia's GDP growth forecast to slow from 2.5% last year to just 1.7% this year. The tensions or trade tensions between the U.S. and China, coupled with global uncertainty, are challenging Australian businesses. In a warning, the Reserve Bank of Australia says that the consequences of Trump's tariff policies could be felt across the global market for years to come, putting Australia's economic recovery in jeopardy. China's consumer prices rise at the slowest pace in 4 months. The CPI increased 0.3% from a year earlier last month, slowing from September's rise of 0.4%. But core inflation, excluding volatile food and fuel prices, accelerated. Economists say the effect of stimulus policies to promote domestic demand in September is not felt yet. New measures announced last Friday are also not expected to boost economic activity. Beijing approved a 10 trillion yuan package to ease the government's debt burdens rather than directly injecting money into the economy as investors had hoped. China's government is being urged to take swift action to address the growing demand for investment financing. The country is facing a wave of economic challenges, from a slowing property market to sluggish industrial output, pushing companies to seek more funding. Experts are urging the Chinese government to streamline the investment process, which remains hampered by bureaucratic hurdles. With both public and private sectors experiencing financial strain, the pressure to offer clearer and more accessible financing has never been greater. The urgency is clear. Without it, China risks further economic slowdown.
China has grown so much over the last 40 years in terms of pursuing urbanization, and we see China as having taken a real leadership role in developing that. We're so proud to partner with China.
Well, the United States has ordered Taiwan Semiconductor Manufacturing Company, or TSMC, to halt shipments of advanced chips used for artificial intelligence applications to China. This marks a significant step in the ongoing tech war between the two superpowers. The Biden administration has expressed concerns that these chips could be used by the Chinese military for AI advancements, which could shift the balance of power in the region. The move will have significant consequences for TSMC, as China represents one of its largest markets. Toyota is set to ramp up its production in China, adjusting its strategy in response to increasing demand for vehicles. The Japanese automaker is expanding its operations in China, the world's largest car market, with a focus on electric vehicles and hybrids. By increasing local production, Toyota aims to reduce its dependency on imports and meet the preferences of Chinese consumers who are rapidly shifting toward electric cars. The shift comes as competition in China's auto sector intensifies, with both domestic and foreign brands jockeying for market share.
In the wave of intelligence and electrification in China, we must collaborate with the best local partners, taking advantage of China's excellent government policies and practical testing environments. This will help us advance the implementation and application of our products, including autonomous driving. We also look forward to these products benefiting the global market and being utilized in Toyota's other markets worldwide.
Meanwhile, the ascent of electric vehicle giant Tesla has been bolstered by CEO Elon Musk's aggressive expansion strategy and a surge in investor optimism following Donald Trump's unexpected political comeback. Musk's vision for an electric future, combined with a strong rally in tech stocks, has driven Tesla's growth. The company is now firmly positioned as one of the world's most valuable automakers, surpassing traditional giants like Ford and General Motors. Analysts are forecasting continued expansion, particularly in markets like China and Europe, where the demand for electric cars is increasing rapidly. A major shakeup in India's airline industry is escalating the competition for business class seats. Vistara operates its final flight on Monday before its planned merger with Air India kicks in the following day, marking the end of a complex and messy 2-year-long process. On Thursday, market leader Indigo, operated by Interglobe Aviation, debuts its business class cabins on select routes as it ventures beyond budget travel for the first time. With India's economy growing rapidly and a surge in business travel, airlines are now vying to capture this lucrative segment. Experts say this competition will result in more affordable prices for business class travel and better services for passengers as companies race to enhance their in-flight experience. Up next, news in Philippine business, the local economy, and our feature stories. Stay on BNC and follow the money. Welcome back to Follow the Money. Bitcoin continuing its post-election surge as it reaches a fresh all-time high. The world's largest cryptocurrency has hit $80,000, breaking its U.S. election night record of $75,000. That record topped a previous high of $73,800 back in March. During his first presidency, Donald Trump referred to cryptocurrencies as a scam. But he has since radically changed his position and even pledged to make America the cryptocurrency capital of the world. Junk-rated dollar debt from developing nations is attracting fresh bets from money managers at UBS Asset Management, Lazard Asset Management, and PGIM Fixed Income in the wake of Donald Trump's election. The funds tell Bloomberg the thinking is that improved fundamentals in some emerging nations, growing foreign reserves, funding agreements, and structural economic reforms will help these credits insulated from potential sell-offs in global rates. They also offer some protection from currency volatility stoked by concerns about Trump's tariff stance. Portfolio managers have been riding a rally in high-yield notes for most of 2024. EM hard currency junk bonds have handed investors a 14% gain year to date, topping a 2.8% return for investment-grade debt. Data compiled by Bloomberg showed debt from Argentina, Sri Lanka, and Pakistan, which has returned at least 23% this year, is poised for more gains. According to Shamalai Khan, head of fixed income for emerging markets in Asia Pacific at UBS Asset Management, which oversees $1.8 trillion in assets. Inflation remains a top national concern of Filipinos. That's according to a survey by the Octa Research Group. The poll found 66% of respondents believe that inflation is the #1 issue that the Marcos administration should address immediately. This was followed by improving wages or workers' salaries, access to affordable food, and creating more jobs. Filipinos were least concerned about changing the Constitution and reducing electricity charges. The survey was conducted from August 28th to September 2nd. The national government's debt payments fall in September. They stood at 93.6 billion pesos, down 61% from the previous year. Amortization drove the decline, decreasing 88% to 19.76 billion pesos. Year to date, though, debt payments recorded a 17% increase, totaling 1.64 trillion pesos. Maynilad Water Services eyeing to push through with a highly anticipated stock market debut next year. The company says its initial public offering could be set for either April or July, with an estimated valuation exceeding $1 billion. While Maynilad's concession agreement requires it to list on or before January 2027, it says it aims to be, quote, push-button ready to submit its IPO application in early 2025. The company is mandated to list at least 30% of its outstanding capital stock within 5 years of securing its franchise. Ultra-Bilyonaryo Ricky Razon all in on International Container Terminal Services, or ICTSI. The world's largest independent terminal operator gobbled up a total of 4.17 million shares at a price range of 369 to 400 pesos. The massive buyback increased the company's treasury shares by 37% to 15.5 million. ICTSI has been repurchasing shares since 2015 when they were trading below 80 pesos each. The company has surged 58% year to date, making it the best performer among stocks on the Philippine Stock Exchange Index. GCash assures its customers their accounts are safe. This comes after several netizens complained about losing money on the app over the weekend. The e-wallet provider says it encountered a technical issue during a system reconciliation process. It adds it has completed the necessary wallet adjustments to affected users. GCash also encourages its customers to report scams through their website, customer service chatbot GG, or their hotline at 2882. Meanwhile, black market criminals are increasingly targeting luxury cheese as the global price of gourmet varieties has surged. The thefts are part of a broader trend of food-related crimes, which cost the global industry up to $50 billion annually last year. Around 50,000 pounds worth of luxury cheese was stolen in the UK alone, including incidents like the theft of 9 tons of cheddar in Somerset in 1998. The rising prices of premium cheeses, such as Parmigiano Reggiano, have made them highly attractive to thieves. In Italy, more than $7 million worth of this cheese was stolen over a 2-year period, prompting calls for stronger security measures across Europe's cheese industry. Japan's beloved Hello Kitty character has undergone a transformation under the leadership of Tomokuni Tsuji, who took over as CEO of Sanrio in 2020. The BBC reports, at least 31 years old, Tsuji became the youngest CEO of a listed Japanese company, succeeding his grandfather, the company's founder. Since then, Sanrio has shifted its marketing strategy to diversify its character portfolio, boosting the recognition of characters like Cinnamoroll, Agretsuko, and Gudetama. These faces reflect evolving consumer tastes, especially among younger generations. Now, despite Hello Kitty's iconic status, Tsuji's leadership has shifted focus toward global partnerships and collaborations with brands like Starbucks and Crocs, ensuring that Sanrio's characters remain relevant year-round. The result? A company poised for sustained success in both Japan and the international markets. And that's it for today's edition of Follow the Money. I'm Raine Musñgi. Thank you so much for watching. Keep it here on BNC, the Bilyonaryo News channel, always on top.